Let's see if we can unmuddy the water just a bit. So we're going to start with the adjustments. So the first adjustment says, well, I guess we go over here. These accounts right here have been pulled off of the general ledger. And that's called your unadjusted trial balance. That's before you look at any accruals or unearned revenues or depreciation. Remember, we have to match the revenues with the expenses for the period. So, if we look at the first adjustment they gave us, they say insurance expired during July is $375. This means that we need to create an expense. And that's going to be under insurance, and that's going to be a debit because an expense account has a debit balance. So it's $375 there. So if I've used up $375 worth of insurance, I need to reduce that asset. So that gets credited for $375, and that takes care of the insurance. Now, as you can tell down here, I've got this set, so it's adding it up. This is in balance. Remember, every entry has to have, it has to be balanced. If I go to do the adjusting entry, it's going to be insurance, expense, $375, and prepaid insurance, credit $375. So we've got our first entry taken care of. The next one says supplies on hand is $1,525. So that means I used to have $3,800, and now I only have $1,525 left. So I've used some of that. So I need to decide how much I have used. So if you subtract $1,525 from $3,800, you will come up with $2,275 being used. So I go down to my expense here. I have to create an expense for $2,275. I have to credit the supplies for $2,275. So I can bring that down. I again will have an entry that says supplies, expense, $2,275, and decrease the supplies account by $2,275. So that takes care of that entry. Now it talks about depreciation of office equipment, and they tell us it's $750. So that means I need to create an entry and an adjustment of depreciation expense, $750, and that goes to accumulated depreciation as a credit for $750. So over here, for your entry, it's depreciation, expense, debit, $750, and accumulated depreciation, credit, for $750. So that takes care of the third one. That's C. Our next one is accrued salary for the receptionist. Well, accrued salary means we have salary that has been earned but not paid. And that would be a salaries expense, right? So I need to increase my salaries expense for $175. That means I need a credit for a salaries payable for $175. Well, we're still in balance down here, and that's good. So I need to create an entry for a salaries expense to do that adjustment. And again, that's always going to be a debit to the expense account and a credit to the salaries payable account because I've not paid it yet. So that takes care of the salaries. I have rent expired during the month of $2,400. So I must have a prepaid rent account. Yep, I do. So I have a rent expense of $2,400 and a, where'd that go? Prepaid rent. I need to decrease that one. So that takes us to another entry. So I have rent expense, $2,400, and I have prepaid rent credited to decrease it for $2,400. Okay, we have one more left, and I'm out of lines, but we'll figure that out here. Let me move that down just a bit. Now my next one is unearned fees were $2,750. So I have unearned fees up here, right? So I need to increase my fees, and that's going to be a credit. So that's $2,750. And we are going to debit to decrease the unearned fees, $2,750. So over here, you have unearned fees debited for $2,750 and fees earned for $2,750. Okay, those are your entries. Now you're not done yet. Now we need to adjust this unadjusted trial balance and turn it into an adjusted trial balance, which means we've got to carry all that over. So I have 32,450 with no adjustments. That's cash. I have accounts receivable 16,450 with no adjustments. Supplies I need to adjust because I have a credit there. So my supplies now become $1,525. My prepaid rent becomes $2,400. See the adjustment? My prepaid insurance becomes $4,125. My office equipment stays at $14,000. But I have depreciation here now, so I've got to enter into the general ledger that $750. And I have accounts payable. It hasn't changed. That becomes $1,300. I have salaries payable now. I have to put that in as a credit. My unearned fees have gone down. They're at $2,750. My owner's equity or capital account has not changed yet. That's $45,000. The draw has not changed. That's at $12,500. My fees earned have increased, though, haven't they? So if I add $41,600 and $27,550, I will come up with $43,350 as my new fees earned. My salaries expense now, that's increased. That's increased to $36,750. And my rent expense is now $2,400. My supplies expense would be $2,275. I would have $750 for insurance and $375. I'm sorry, for depreciation, and $375 for insurance and $1,400 for miscellaneous expense. So this is my adjusted trial balance. Isn't that cool? We're balanced. I'm balanced here, 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 and here. Now we're ready to pull off the income statements. And the income statement starts right here. So I've got to pull that over to credit. So it's 4,4,350. And these become my expenses, correct? And how do we get the net income? Well, we take the revenues minus the expenses, and that will give us net income. So if I add these up, if I've done this correctly, you should have your net income. The next thing you would do, as you look at this, so that's kind of how you set this up. So now if you compare these two, let's add this up. I'm going to do auto sum so we've got it, so I don't make any silly mistakes. Now we see we've got a difference here. So what is the net income? The net income should be 44,350 minus the expenses, which gives us net income right here of 33,475. So that kind of is balanced, and that tells you your income, and you can pull your income statement off now, alright? So now we need to go over and make sure the balance sheet is going to be balanced. And we're going to use this net income to balance it. So this all gets transferred down, 32,450, because there was nothing done for that. 16,450, remember the accounts you use. 15,250, 2,400, 4,125, 14,000. Got that. Now we need to do $175,250, 45,000, and that's all of our that's our balance sheet here. Let's see if it balances. And we need to do this. Let's see what we come up with. I've missed something. Yes, I did. I missed the draw. That needs to be over there too, because we've not done with anything with that yet. So that's our balance sheet. Let's look and see what we have now for, because these are our debits on the balance sheet. These are going to become our credits. Let's watch this and see what we got. Oh my, that doesn't balance, does it? I bet if we add net income to that, you're going to balance. So let's see what comes up here. And now, let's pull those down. There you have it. We have 83,450 and 83,450. And you are now in balance. And that is how you do the adjusting entries with the worksheet. Hopefully that helps. Please email and question. Now the next one I'm going to show you are the closings, okay?